Good afternoon, Fabian Onetti, transmitting today from beautiful Buenos Aires, 92 degrees, and as you know, my favorite, the Hotel Alvear. We're going to cover the week of February 4th through February 8th. We're going to talk about European growth, the negotiations between China and the US, a little bit about the markets, flow of funds, some technical issues there, which I think are interesting. Some, more of the little bit of what's happening with the Fed and all the comments and all the stories. Little bit about metals, commodities. They had a very good month, and also the Valley issue, which is affecting that part of the world. We have the State of the Union on Tuesday. Like always, our focus on Venezuela. We were the latest over there, and some new comments in oil market. So let's start first with some quick news. For the first time, we had some good news in European growth. Remember, we were worried about bad numbers on industrial production coming out of Germany. Italy is officially in recession. The bonds, for instance, went from zero point 0.6 in October of return. The 10-year bond, the German bond, went from 0.6 to 0.12. So clearly, worry about growth, issues like that. But finally, in December, we are getting some numbers that industrial production in France pick up, and also consumer confidence. So that's, not everything is so bad. I mean, remember, in December, everybody was talking about recession, and now we're talking about slowdown and a little bit of pickup in demand. And now it looks like it's not only in the US, but we have some good signs in Europe as well. China, US, the negotiations continue. My understanding is now Steve Mnuchin and the team goes to China to keep working on the deal. But also one of the things that spooked the market is like at the beginning of the week, the press has quoted that President Trump was going to go to China to meet with Xi Jinping, sort of to seal the deal. And then I think on Wednesday or Thursday, the White House says there is no plans for such a thing as we know, and the market took it badly. However, negotiations keep moving at a good pace as far as we know. Very interesting. In January, the fund flows to mutual funds and ETF was negative, and the market was up. The market is up 16% since the lows of December. So that's very strange because usually, as the market goes down, clients sell. When the market goes up, clients buy. Here we had a market going up and clients selling, which tells us that there is some dry powder for that market as investors probably want to come back. And going on that, on the technical side, the market hit the 200 moving average 27.42, and if you look to the technical analysts, usually say when they touch these benchmarks, usually the market retreats because people looking at them sell once they achieve the objective. However, we did that, and the market did not sell off. Another good sign that it might be some dry powder out there just for the market. So that's positive on that side as well. The banks, the economists, all the people who talks about the economy, starting to adjust their views on the new Fed, on this Fed that basically says, listen, we're not political, we're looking at the data very cautiously, we're flexible to what is coming. On Tuesday night, Jerome Powell, chairman of the Fed, had dinner with President Trump. They didn't talk what they were talking about. The market was trying, so the Fed came with a statement, as expected, that they are independent and they are looking at the data. But clearly, we have a free pass from the Fed. At least some people would say until mid-year, June, July, and some others now are arguing that we might not even have a rate increase. That's actually the market. The market now is pricing zero rate increases this year. However, most economists is not so fast. We still have the Fed that may do one or two more rate increases. But clearly, in this environment, most economists are saying will be no recession in 2020. The slowdown will pick up, and then eventually will keep on going. Ed Hyman, the best economist in the United States, was speaking at Bloomberg, and he said, listen, this economy has grown 50% on the last 10 years. It's 50% bigger than before. And he travels around the country, and he does not see any signs of this thing slowing down for now. So, it's a very positive side. And, on March, so basically a few weeks away, it will be 10 years of economic expansion, started in March of 2009, and to the labor statistics and all that, it's going to be the longest expansion on economic since World War II, and probably in the history of the U.S. There were some very early on, but they're probably not very properly measured. So the longest expansion. That brings a lot of conversation in the press about this is going to be there. There is always a recession. They always bring the case of Australia that has been 27 years growing without a recession. Our view, Winston, is like the U.S. economy always fires on eight cylinders, meaning it uses a lot of leverage, a lot of sophisticated finance here and there. So eventually things go wrong, and you had a recession to rearrange and reaccommodate things, and then you get on. But for now, I think we are in a very good shape. State of the Union, there was no much on the economic side other than this effort to keep on the wall, and also he confirmed that he's going to meet with a North Korean leader, Kim Jong-un, 27, 28 of February. And that's why people thought, well, if he's going to be in North Korea, then he might meet with Xi Jinping in China. Not the case. I don't think that he will do that, even for a geostrategic reason. So that's the only thing that came about that. The metals and the commodity also had a very good January, which is interesting because, as you know, we measure the metals as the demand that comes from China. This is a good thermometer. China is at the margin, is the largest consumer of metals in the world, and they cannot be storage. It's difficult to speculate in them, and all the metals had a very good month. Also, but careful, because also we have the Vale disaster. Iron ore went up 30% because of the fears that Vale might not supply all the iron ore. Steel production is just in time. You cannot stop the steel mills from working, so it looks like the Chinese scramble to get any iron ore on the fears of suspension. But that's kind of here. On the Vale issue, careful, a lot of problems. There is negligence on these dams that broke. Some people say it might be gross negligence, and if that's the case, we're looking at the British Petroleum Gulf explosion or the Petrobras Lava Jato, huge amounts of fines, lawsuits, etc. Remember, Vale traced on the U.S., so you'll have the class action lawsuits, right? Investors, etc., etc. So we're looking into that, careful on that story. And then on Venezuela, the the Treasury clarified that there is no trading allowed in any bonds of PDVSA or the Republic of Venezuela. Basically, no U.S. person or citizens can transact in them. A lot of speculation. This is something that it almost has no precedent ever happening on all these sanctions. Whether the government is doing this because they know that the Venezuelan government has some of these bonds stashed somewhere and it's a source of money, or because it's going to be a harsh restructuring and they don't want the vulture funds and all these, very opportunistic funds to accumulate positions and to make the restructuring more difficult. We don't know the reasons. No one knows. The Treasury has not said, has not clarified that, but it did clarify that there is no trading. So, like always, we will follow the situation on the political front. Not much has changed. It's all about this humanitarian aid coming to the forefront, and whether it gets in or it doesn't get in. We had a bank merger, BB&T and SunTrust merge. So 10 years after the recession, they will create the sixth largest bank in the United States. And the very interesting thing is that the Fed, for years after the crisis, didn't want any bank mergers because, they're too big to fail story and supervision, all that. The fact that this happened this week means that finally we are, at least the eyes on the Fed and the controllers and all that, pretty much out of the 2008 financial crisis. And finally, looks like the Saudis and the Russians want to do a new OPEP. It's a new OPEP with 10 countries, which is basically Saudi, Russia, there are some of the other friends, and excluding the Iranians and the Iranian friends for whatever reason. But still, as many observers say, it's not being very effective because the marginal producer today is the shale oil producers in the United States, and these guys pump as fast as they can. So it's going to be very, very hard for the Saudis and the Russians to stabilize the price as they want when you have one player that basically is pumping as far as they can. That's all we have. This week we will be in Buenos Aires, so we'll be transmitting, like always, for our clients every day at 9:45 a.m. New York time. And for more information, you can always go to our page and find everything.